All right. Good morning, rhinos. And of course, I can't get this to be straight, but that's okay. Not a problem. We'll figure it out. We'll figure it out together. We always do. Oh my God. Why is it that you can't have any reference? I feel like that's a life lesson. When you're too close to something, you have no reference. But when you step back, you can see it perfectly. Let that be a life lesson for everyone. Cool. Wow, we have a lot of people in to start. How cool is that? Wow, this might be the most people that ever started a broadcast with us ever. And I really didn't have anything great today. I thought okay, we kind of had all of our success this week. I have a t-shirt on. Let's hang out a little bit. But no, you guys said, no, Anthony, we are going to make you give a good presentation today. And Anthony says, well, that's RHINO. We always will do a good presentation. So let's get a little chapstick so that we can talk. And let's have some fun. Okay. So this week has been exciting. So if we go through the week, and not to hit every touch point, because if we do that, it'll be 45 minutes past before we know it, and we won't have any time for any good stuff. And it does seem like we need to get to some good stuff, right? Well, good stuff in terms of actionable going forward. We all have a really good foundation of where we've been, especially if you've been a part of this program for at least this week, because we really do every single day map it out for you. And by for you, I do not mean that as a service to you. I mean, it's something that we do together, right? I need to map it out for me. I do it live. Therefore, we map it out together, right? For you, together, whatever. So this week, we had the opportunity to get into Lucid. We didn't take it. We believe that we were one day short of that golden opportunity that was going to allow us that really, really high probability. And as things unfolded, we saw that it would have worked. Lucid was a 40% gainer. We were able to go back, take a look at the prices, take a look at where we were talking about it, take a look at what the sell would have been. And of course, that sounds like a lot of ifs. But again, if you've been part of the program, you're replaying it in your head and you understand, okay, some of us did take it. I personally didn't. And long story short, right? The next day came which was yesterday, and we identified Twitter. We said Twitter is the play. In fact, the day prior to that, we said if we have the opportunity to buy Twitter, or if we have the opportunity that if the market pulls back due to the CPI data and we identify a situation that makes sense, we will buy it first thing in the open. Now, of course, we never buy anything between 9:30 and 10:30 because we believe that's a very emotional hour. But for this particular position, since we believed that we were looking to take advantage of the emotion of things coming down, that was exactly the ingredients we wanted to go ahead and buy Twitter. So we did want to buy it based on people's emotions, because what we all saw was Twitter went straight up the rest of the day, or at least that hour, right? So we got out at a 40% profit in a RHINO record time of 18 minutes, which is pretty cool. I don't know if I could ever beat that. Well, I mean, I probably could, but 18 minutes is really, that's going to be the standard for quite some time. So we bought our Twitter calls, which were March 40s. Hold on, I got a message, and there are some important stuff going on. Sounds good. Okay. In the world of RHINO, there's a lot going on today, personal and professional, so bear with me a little bit. So we bought those Twitter calls, March 40s, and they were $1.32 a piece. We were able to sell them 18 minutes later at $1.85. What we said at the end of our call yesterday was, we don't like this market. In fact, we even moved it up to a 67% chance that we believed that we were going to have a pullback. And what we said to everyone was, we're never going to make that trade unless we believe it's 80%. So we were right there. In fact, we even said, and I believe Don questioned, what do you mean by this, Ann? But towards the end of the call, we said, we are hoping this market stays steady. We are hoping this market opens up tomorrow because we want to go ahead and short this market. We believe this market's going to pull back. Now, kind of like the Lucid position, we were right, but just, it happened earlier than we wanted. In fact, right after our call yesterday, the market went down 500 points, as much as 600 points. Well, that would have been pretty cool if we said, all right, you know what? We sold Twitter, let's short the market. And it's in that sentence that allows one to, or should illuminate one to understand that that's why you're going to lose money. You cannot do stuff like that. You cannot become so omnipotent because you have a good track record and you have good recent performance to say, I did this, now let me take the money and do this. No, if you made a gain, walk away. Have a refreshed opinion, have a refreshed sense of perspective, take a look, learn some more stuff, step away, right? Now, that doesn't mean that you won't regret it. Sometimes there are going to be sometimes like yesterday that when I looked at the market, I texted my wife and said, oh my God, how much of a hero would we have been if we shorted the market? And she's like, oh, it's probably not too late. And to her credit, that was correct. It went down a little bit further than that. But the point remained, we understood what we were looking at in terms of the charts. We knew what we were looking at. We said the pullback was coming and it was imminent. We were just hoping that we got a good price point, that we were just hoping that we could do it in the morning, that if the market was able to kind of fool enough people that this pullback wasn't coming and the market was going to open up 100 points, then we would just go ahead and do it. Now let's take a look. The market went down 600 yesterday. If it opened up 100 today, presumably the up 100, the minus 600 from yesterday would have equaled the next 700 points being down. Now, of course, that's a lot of woulda, coulda, shoulda, if, and a lot of variables. So you can't really draw a straight line, right? I'm not sitting here saying, well, because this happened yesterday, it's proof that it would have guaranteed happened today. That's not it. Again, we're always playing with probabilities here. And the probability is that because we saw it and because it happened, we can feel comfortable that we understood why it was happening. In being comfortable that you understood it, you can then say, you can have a certain comfort level that the probability meant because you understood it already and because it did happen to confirm your understanding that it was going to still happen, right? And again, we get into a lot of behavioral science on this platform because that's my background, but that's the way that works. So we missed it. So at the end of the day yesterday, I saw the market down 550, 600 with like 10 minutes left. And in RHINO Wealth, I even wrote at 3:45, right? 15 minutes till the close. Guys, I'm really looking at stocks right now because we're right at the line. Now, the NASDAQ trend line, presumably, well, not presumably, the NASDAQ trend line has held trend, right? It went like this. And again, we'll show you the charts, so stay with me here. It was support here. It was support here. And now it was right at the line over here. And of course, to you, that might mean nothing, but we'll show you the chart. So if you could just kind of picture a chart, you're good. And that's where it was at the end of the day. And we said, well, this is a very binary action. And we didn't say the word binary, but I'm sharing it with you now. One of two things is going to happen. Either we're going to break this line and go further down, or we're going to bounce in this line, even if it's temporary, and get a little bit relief because you're right at the line. It's support. You should have people, again, professional money managers look for reference points. They're on the line. It pulls back. I could put money in here, and if it breaks the line, I'll sell it. But if it holds the line, I could be a part of the next leg up. That's how a professional money manager looks at money. Okay. So what happened last night? The futures were down like 200, 300 points, and NASDAQ futures were down 100. When I wrote in RHINO Wealth this morning, Twitter was down to 36.70. The market was down 200 points, and I was like, oh, but why did we get into Twitter, right? Well, two things. If you took a look, if you noticed, and I did share this, what was the size of the position I put into it? 1/8. Have you ever seen us purchase 1/8 before? No, it's usually 1/2 or 1/3, maybe 1/4, but 1/8. What does that illustrate to you? We believe in this setup, right? We have a potential for a bounce here, so we like that. If it bounces, we're all clear. Great, cool, love it. If it doesn't bounce, we are still in a company that is going to be buying 13 to 14% of their own stock. And 2 billion of it, half of that being accelerated, being immediately. Therefore, if the stock continues to go lower, that 4 billion that they actually have approved in their hand right now can buy even more of the company. Maybe the company can buy 14, 15% of their own stock. Do you know what happens to a company where 15% of it is being purchased by anyone, but especially by themselves? It has a floor. It has support. That's what that money acts as. People don't go around and say, I'm going to short this company, I'm going to sell this company to zero, because they know management's right there and they'll buy it from them. Therefore, if you are going to short a company, which means you prosper on the price action going lower, You do not want to do it to a company that is standing there with money saying, oh yeah, go ahead and sell, I'll buy it right now, because you're not going to make money. In fact, at that point, it's how many people are willing to sell. Is there more buying than selling? Because if you do not have enough sellers to eat through that 4 billion, that stock is going to rally higher because you would have exhausted all sellers. Okay, so that's another reason why, and that's the reason why I bought Twitter. Okay. Well, Anthony, how do you know that this isn't going to go terribly bad? Like maybe the stock goes down to 20, like it's 37, 38, somewhere over there, 36, something like that. Well, that's what we did this morning. We did a fundamental analysis on Twitter, and we shared that in RHINO Wealth. We took a look at you have to know if the circus is in town. So we went ahead and put up a chart of the current cash on hand for corporate America. It is the highest it's ever been. It's almost $300 billion. Then we took a look at Twitter. Twitter, as of this morning, at that time that I wrote it, was a $29 billion company. Twitter has $7.3 billion in cash, stockholder equity, right? That's what cash is on the balance sheet, which means Twitter is actually only worth $22 billion. It's not worth $29 billion. $7 billion of it's cash. It's just cash. You have to value it. So you can take the cash out. It's $22 billion. Okay, what does Twitter have? Is it profitable? Yes. Okay. Is it growing? Yes. Did it do over 5 billion in revenues last year? Yes. Does it have 215 million monetizable active daily users? Yes. What does that mean? People that buy stuff, people that run ads, people that you can make money off of, monetizable. You can make money off these people. How much money can you make off them? Well, I don't know. It depends how good you are. Can you make a lot of money off them? Can you give them stuff they want? Like, that's a management thing. Well, our management hasn't shown to be very good. Well, who's your CEO? Jack Dorsey. No, he's not. You just got a new CEO. Presumably, the new CEO has answered this question, knows how to monetize those users. Therefore, you have that behind you. Okay. Well, what's their projections? Well, they're projected to have 315 million monetizable users by Q4 2023. So by December next year. Okay. So let's talk about this, right? So you're a profitable company, brand new CEO. The former CEO, which was the creator and founder, is still on the board, which, by the way, he owns Square as well, right? So he's kind of important. You do over 5 billion in revenues. You grew revenues 37%. You're profitable, and you control all of this data. That's pretty good, right? Like, I think that's pretty good. And you are the news industry, right? You are the news industry. Well, it's a big industry, certainly worth more than 22 billion. Oh, great. So you have a good pathway to continue growing. That all sounds great. Do you have big people in it? Kathy Wood, who everyone makes fun of, is one of the largest shareholders. I forgot the name of the manager. I think it's Elliott Management. They went ahead and recently increased their stake as of last year, and they're a top 5 holder, which means you have one of the largest, most successful hedge funds ever. I'm talking about since 1970 as one of your largest shareholders. This is all good stuff. I like this. So what's there to be upset about? So let's take a look at the active users, right? So if you take a look at the market cap today, which is, I guess, 29 billion, and divide it by the 215 million daily active users, the monetizable ones, that means each one is worth $102. Okay. Now, you guys have all been a part of internet marketing. Let me ask you a question. Is $102, would you pay $102 for a new lead that is already bought stuff from you? And the answer is yes, right? Like, I don't need to wait for an answer. If somebody has bought from you before and or has made you money before, and you were able to pay $102 to retain them and keep them, would you? And the answer is yes, because you know to yourself, all right, well, now my job is to figure out how to sell them more stuff. These guys are already paying me. How do I go ahead and sell them more stuff? Would I buy a customer for $102? Yes, of course. Okay, well, at this current market cap, against the current projections of 315 million of these people by Q4 of next year, what's it cost then? Well, if you hit that number, and if it's a big word, right, but like we believe they will, that means each one of these people only costs you $70 today. Would you buy a customer for $70? The answer is yes. Okay. So if okay, tech is going down, Anthony, the cost of money is going to go up, they're going to raise rates. Okay, let me ask you something. If the cost of money is going to go up, what do you do to anything where the cost is going to go up? What do you do to it today? You buy it. Because if the cost is going to go up, you want to own it here. Well, if Twitter already has 7.3 billion sitting in cash, if the cost of cash is going to go up, why wouldn't you buy the cash from Twitter right now? It's 7.3 billion sitting there on top of a company that's making money, on top of a company that's profitable, on top of a company that's growing, on top of a company that on every metric everyone would want. Well, you know what? They go ahead and censor political speech, right? They're bad. We fundamentally just don't like them. All right, so culture, I get it. I understand that. They kicked off Trump, and Trump was why people went to Twitter, and they've never been the same since. Okay. So if Trump came back on Twitter, there'd be a big boost to Twitter stock, right? Well, how long has he been banned for? I think he was banned for 2 years. I think it's been a year and a half already. And we'll look at this, but I kind of think he's allowed to come back on this year or next year. I don't know. That kind of sounds like a pretty good catalyst. Oh, well, and we don't like the culture. Well, the culture was based on the CEO who was the founder. It's like RHINO. If you don't like the culture of RHINO, you better pray I die or just move on. Because I'm the founder. This is my company. I will always go ahead and institute the culture that I believe at my company. But if I go ahead and leave the company and a new CEO comes on, that CEO could be far more objective. I'm highly emotional. I am RHINO, right? But the next guy could be very objective. And you know what? You were a little rough around the edges. Like, I get it, but I understand what the people want. So to go from founder to new CEO, that just happened like a week ago, is really, really optimistic about the future. Okay, all of those things are great. And this sounds like a reason to own Twitter. So why'd you buy only an eighth of a position? Okay, well, because the buy of Twitter was purely a trade. Like, we were looking at it on a trading basis. If the market holds this line, we think it's going to go up. Simple. If the market does not hold this line, we still want to own Twitter. We want to own Twitter as low as it goes, because you can look at the market, right? You say, all right, I want to buy the stocks. When stocks go down, I get scared, I run away. With Twitter, you actually know the value. The lower it goes, the more attractive it should become, because we know the value of this thing. So it's not like Tesla, right? Like, if Tesla goes down to 400, people would say, oh my God, it went from 900 to 400. But it would still be valued really, really rich. Tesla's not profitable without government subsidies. Tesla is a growth company that is completely on growth. If it went down to 400, it would still be trading 100 times earnings. So can I look at Tesla today and give a fundamental analysis of why anyone should own it? No, I can't. It's crazy. Do you know the EBITDA value, so earnings before interest, tax, and all the other nonsense, is actually in the 50s? That the stock is trading under that. So again, there's got to be a reason. Is it just that the market is having like a temper tantrum and is throwing everything out? Is it because Facebook got annihilated and everyone's throwing all social media stocks out? Is it a culture shock where people just fundamentally don't like Twitter and how they censor speech? I don't know, right? Like, I don't know, but I do know the value of the company. I do know that their CFO, Ned, whatever the hell his last name is, was actually on CNBC and spoke about the buyback. So it's not even like it's an uncredible company where it's like, oh, well, they said they were doing a buyback, but what if they don't really do it? No, they're doing it. 2 billion's accelerated right now. They're buying stock. And they have 7.5 billion just sitting there. And they're growing. And they did over 5 billion last year. Could a company like, I don't know, Salesforce buy Twitter? Could a company like Fox News buy Twitter? Could you name the company? Can Disney buy Twitter? Can Microsoft buy Twitter? Right. So when you start getting to larger companies, you might say, well, Ant, there's what's it called? Against monopolies, anti-competitive, right? Like, they can't go ahead and do that stuff. Yeah, well, Facebook can't buy Twitter. I get that, right? And Google probably can't buy Twitter. Could Apple buy Twitter? I don't know. Antitrust, thank you, John. Could Apple buy Twitter? Maybe. Could they? Could a Chinese company put in a bid for Twitter? Could, right? Like you name it. Because there's $300 billion sitting on corporate balance sheets. This money, they are not going to put into government bonds. This money, they are looking to buy back their own stock or return it to shareholders or go ahead and buy growth. That is the three things they're going to do. And here you have a company that has $7 billion in cash sitting around, worth only $22 billion, growing, made over $5 billion last. Like everything says go. So that is my analysis on Twitter, and which is why if Twitter's down right now, which I'm really, really hopeful it is, I would like to buy more. So let's go ahead and take a look at the market. Okay, so let's go take a look at what's going on today. And before we buy it, let's go ahead and outline where the QQQ looks. I don't know where they are. If they're under that line and they broke trend, that's not good. But that's not good for overall market. And overall market brings down overall market, which is good if you already know the one company that's going to rebound first, right? Like a lot of what we're talking about has to deal with and is based on the assumption that we know what this is worth and that everyone else can find out easily what this is worth. Because then if we know a Ferrari has the real engine in it and it gets sold off, well, it doesn't matter how low it goes. We're going to buy it because we know that it's going to go back up. That's the assumption with Twitter, right? Like if that assumption's wrong, then we're going to look really stupid. So let's see where the market is today, right? E-Trade, stock market. Okay. So where are we? Okay, the market's up 115, which the futures were down 250 last night. So that's good. Now, but let's take a look, 0.33%, right? Now, what does that mean? Foreign money is coming into the market because why? Because the S&P is 0.02%. This is American money. This is hedge funds and private equity funds and things like that. They're underperforming. This is where they put their money. Well, you can't say they put all their money there, but this is their benchmark. So this is what they shoot against. Tech is down 0.39%. Who are the people that are in tech? Remember the other day when we said that stockbrokers are like the least credible people to follow? That was when the NASDAQ was up the most that day. What has happened ever since? The NASDAQ's been annihilated because these people just buy, go, 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 and sell, go, go. They don't know what they're doing. So if the NASDAQ's down the most, let's go ahead and move and take that argument and reverse it. If you do not believe following the stockbrokers of the world is the best thing to do or the smartest thing to do, then you would not have bought when the stockbrokers, when the NASDAQ hit its high 2 days ago. And by not buying 2 days ago, you would look really smart right now because the market's come down. Conversely, the stockbrokers right now are the ones selling the market. So if you believe it would have been good not to follow them by not buying when they were, it's conceivable to say it's a good idea to buy when they're selling now because they're always wrong. So that makes me feel really good. And the Russell's up 0.66%. Again, the Russell's outperforming. Now, what is the Russell? It's the 2,000 stocks and the smallest and most sensitive to economics because they are all economy. They're just these small companies that need an economy to be doing good to sell stuff because they don't have savings and brands and all the rest. Like they're small companies. So they're either going to do good in one of two situations. Either the economy's doing really well, or there's a lot of money that's sitting around that needs to buy companies. Therefore, they're going to go ahead and cherry pick with the best values first, which means they're going to go to companies that are the least expensive, but have the highest value. Well, that's kind of like the argument we're making for Twitter, that we believe at a $20 billion company, $22 billion after you back out cash, now why wouldn't someone buy it? In fact, why wouldn't someone buy 10 billion of it, right? Like there's things to do. How many SPACs out there exist that have all this money and don't know what to do with it? There is money. And we believe that Twitter presents the best value proposition that we've seen in quite some time. And the market is telling us everything looks just fine, right? Now the VIX is up a little bit. That's not good. We would like to see the VIX down when the market's up. So that's the only thing I would kind of give a little pause, right? So let's take a look on the market. Okay. So what we can see right here is that we were under this line, which is not good. So as you can see, we stopped dead on that line yesterday, right? You can see that. Let's see if I could make this a prettier picture. Okay, we stopped dead on that line. Now, as you can see, we opened dead on that line. This left line is opening. We went over that line. We've since come underneath that line. We are now fighting on the underside of that line. But what did we kind of bump against? See this downtrend line? This is a line too. Remember, we have a map. We can see the map. It didn't break it. It didn't get all the way down to it, but one could say that line acted as support. It didn't go underneath it. So where are we? We're in what you call the crocodile jaw. And I don't know if they really call it that. I kind of made that up, but I feel like it should be called that. Because look, here's the top of the mouth, here's the bottom of the mouth. Do we break out of the crocodile jaw to the top side, or do we break down to the bottom side? If we break down to the bottom side, this looks like an area that's in play, right? Well, that's not good. But what do we own? We own Twitter. So let's go ahead and take a look at Twitter. Oh, by the way, I have a sell order on Twitter for 20%, not 40%. I put it in yesterday, so if it got sold this morning, I'll take the 20%. We might have to take that off. We'll take a look. If it gets sold while we're doing this call, I'm not going to be upset. But let's see, right? Actually, let's go back. Let's do the work, right? Let's not get lazy. So I believe this is the VXN. Okay. So the market has gone down, right? Volume has gone up. And remember, we said that presumably this was going to happen yesterday. We said the volume was going to be higher and the market looked to be lower, and the VIX and the volatility went up, which gave us the sign that the market was going to come down. That was the calculation. And it did. It just came down earlier than we wanted. And like I always say, the market doesn't ask me, hey, Ant, are you ready? They just do their own thing, right? They're like children, which actually, I used to date someone that said people drink because they want to feel like children again. That when you drink, you can say what you want, do what you want, bump into a wall. And the next morning you're like, you're mad at me? Like that, I was drunk yesterday. That was kind of one of the smartest things that person ever said. Now, granted, we were kids, right? So I'm not being mean to her, but it was just a sentence that stuck with me. I kind of think the stock market's the same way. I think it's just a bunch of children. All right, anyway, so the VIX is still going higher, right? But the slope, the rate of change is decreasing. And that's when we start getting the volatility. Volatility, that's kind of like this stuff down here. Now we can say that this volume is going to be less than this volume. It's a Friday. Now, mind you, it's a Friday in February, so people are participating, but this volume yesterday was big, and we don't think you're going to get anywhere near that. Okay, so you're not going to get this volume. The VIX is going up, and the price maybe stays down, right? So if the price goes down and the volume theoretically is probably going to get cut in half today, what does that tell you? And the volatility, the rate of change is slowing. It tells you that selling is getting exhausted, right? There's not as many sellers. The market's down, but there's not that many people selling it anymore. The rate of change and volatility is decreasing, so people are becoming a little bit more comfortable. What does that mean for the next move? Does it guarantee the next move to be up? No, it doesn't. But does it give you a backdrop, a fertile soil to plant a seed and believe that it's going to grow? Yeah. So with that said, we believe, and we are still constructive, that the market is going to hold up in the near term. Now, if this breaks and comes down, we'll be happy. We'll buy so much Twitter, your head will spin, right? Because we see that this is becoming exhausting. We do not think we break this line. First of all, we have always maintained that we don't even believe they're going to raise rates. So everything going down because of rates is cuckoo for Cocoa Puffs to us. Now, we are becoming a little bit more, we're acknowledging that the Fed might actually be dumber than we think they are. And they might actually think that they could raise once and scare everyone and show them that they mean business, because they have to protect their integrity. If they don't raise rates, no one's ever going to believe them ever again. So there's a measurement of integrity. That's quite the needle hole to thread, right? I always believe just live to fight another day. You can deal with the integrity question another day. You can fire some Fed officials, get new ones, have them come out, speak. But if you risk raising rates, I think it's going to be a problem. In which case, we're going to short everything emerging market, because the dollar is going to spike so high, it's going to choke off every economy around the globe, and we're going to make a ton of money. So if they want to raise rates, I will dance naked while people lose money. I don't really care. I don't tell the market what to do. I can only be accountable to what I do in response. So if they raise rates, we're ready, right? Bring it on. But I just in my heart of hearts don't think anyone can be that stupid. But sometimes I give people too much credit. People will surprise you. There are people that are actually a little sillier than you think that's even possible. That being said, I know my wife is sitting there like, Anthony, stop saying silly. I told you. And I even said stupid. Like, that was like, I shouldn't do that. I need to be better than that. And I'm sorry. So we're going to see what happens today. Now so we believe that the selling's becoming exhausted, and that the next move is going to be higher. That's our opinion. Okay. So in that opinion, you want to find something to buy. We still will stand with Twitter, because also you have to understand that we are not unique in the sense that only Anthony thinks like Anthony. The collection of thoughts, only Anthony thinks that collection, yeah. But any individual thought, probably someone else thought it as well. So there probably are, people in the market that have looked at Twitter and said, okay, this market's volatile. I need to buy something. I have all this money. What can I buy that's in a beaten down sector, that's profitable, that has a whole bunch of catalysts in front of it, where the company's actually buying their own stock and is a brand name that people understand? Because if I could find that, I'll just put my money in there. Because if I lose money in that, I could justify that to my investors. Hey guys, this is the reason I bought it. If I lost money, everyone lost God knows more money. You're lucky to be with me. I could justify that. And if the market goes higher, I can justify that I didn't make $1 bazillion because I risk managed. I did not go ahead and take my clients' money and put them in some garbage company that we got lucky because the market spiked up. I put them in a solid company and they made money. They just didn't make as much as those people, but who wants to take that risk? I could live with that too, which means as a money manager, if the market goes down, I could save face. I could look good. If the market goes up, I could save face. I could look good. But to not buy something will get me fired, because who would pay me to manage money when I don't actually do anything with it? Are you going to pay me so I can put money in my bank account and you can watch me and I can sit there and say to you, well, you know what? It didn't work. It wasn't a good idea. I didn't know what to do. You would say, well, idiot, like, give me the money back. If you're not going to do anything with it, the worst decision is indecision. You can make the wrong decision, learn from it. You can make a good decision, good job. But if you make no decision, I want nothing to do with it. So in a world where you have to make a decision and you want the decision to win in both case scenarios, what do you choose? And I think Twitter is that pick, which is why I'm sharing it with you. I'm sharing my research and my opinion about it in front of a crowd. Because don't think for 2 seconds that I'm not always conscious that I have to live by my performance. Again, I'm not managing, suggestion, recommending anything to you. But if you watch me lose my money every single day, are you going to continue watching outside the entertainment of look how silly Anthony is? No, which means it is easy to calculate that the success of this platform, and by straight line, the success of RHINO is being tested every one of these calls, because A, if we were to believe Anthony can do anything of what he says, is he successful at doing something right in front of us? And if he isn't, but he was believable, he's therefore delusional and dangerous to listen to. Therefore, I don't want to be a part of what he's saying he's doing over there, because I'm clearly believing what he's doing here and he's not even able to do it in front of me. Therefore, I am in that position that I need to go ahead and make a decision. I can't sit with indecision, and I have to make a decision where I'm going to look good one way or the other. this is what I choose. And by performance, by track record, 21 out of 25 times I've been correct. Does that mean I'm going to be correct forever? No, in fact, the odds say you're going to be right half as often as you're going to be wrong. So maybe the next 21 out of 25 I'm wrong. I don't know. It's possible. It's mathematically possible. I don't know. But it's also mathematically possible that I'm right the next 100 times in a row, and some joker somewhere is wrong 100 times in a row. And the odds are calculated based on the population, not any individual, because there are individuals that outperform the market. Whew, so many big words there. All right, so let's take a look at Twitter. All right, come on, Twitter. Now, this is the volatility of the NASDAQ. We do not have a Twitter volatility, which would have been cool, but we don't have it. Okay, so let's pull this back a little bit. Let's see where we are. Let's see what's going on under the hood, right? Okay. So this is a long chart of Twitter. And if we're making the argument that we believe that this is going to be a buy for larger money over a longer term time frame, then we need to have a reference point that's conducive with that opinion. So let's take a longer term look. So this is, let's go back to March of 2020. This is when COVID started. Well, it was when COVID came to the shores. It probably started in a lab somewhere, but that's a story for another day. Okay, so let's draw some lines. I don't know where this is going to end up, but let's find out together, right? So let's draw this trend line. Now, when you draw these trend lines, what you're really looking for is the stock, is it sensitive? Does it react to the trend lines? Does it hold them? It does. Does the participants in this market use these trend lines? Because if they don't, then there's no point in using them, right? So what can we see? Support, support, support. It broke, went under, broke over, stayed over. Support, support, broke under, but once it broke over, stayed over. Support, once it broke under, yikes, stayed under. But once it broke over, but then it broke under, yikes, yikes, yikes. Once it broke over, okay, look, support again, support again. Okay. And that actually wasn't as crisp as I would have liked it, to be honest with you. And I'm sure you think that as well. So let's make two trend lines, because there's no rule that I can't make two trend lines. I can do whatever I want to do, because in America, I have this thing called freedom, or at least I thought I did before we had this last election. But again, story for another day. All right, so you can go ahead and draw a channel trend line. So this low, support, resistance. Okay, support, support, up, went underneath, broke under, broke over, went up, support, support, once it broke under, yikes. And look, do you think I looked at these two lines when I drew that? I didn't. I looked at these lines. Do you think it's any coincidence that this all happened there? It's not. So we know that these two lines are quite important, that this stock does respond to trend lines. Perfect. Now we know that they work. Now let's use some. Right? Like, you wouldn't use a knife to cut a steak if it could not cut. You would say, well, there's no point in using this, right? That's what we're doing. Okay, so let's take this top and let's draw some lines. Okay, we are looking to connect this line with this line. Do you think it's a coincidence that it connected this line? It's not. People use trend lines. This stock uses trend lines. That's really cool. All right, so let's take a look at this line and bring it down. Okay. This top, this top, this top. And as you can see, it was resistance. Once it broke, it stayed over. Then it broke underneath, stayed under. Look, it hit its head, it hit its head. So, okay, so now let's do a support line, right? Let's see. So this kind of looks important, right? And again, we're looking to connect as many lines as possible. But for those that have been a part of this platform long enough, they know that we're never looking over at the right, because that would bias our line, and we don't want to bias our line, because the only person we'd be fooling is ourselves. And I don't know about you, but I don't want to fool myself. Okay, so that looks kind of important. All right, so now that we draw our lines, let's go take a look at what it does. Where are we? Here we are. So this line that was support is acting as resistance, right? Now, we did not look over here when we drew that line. Do you think it's any coincidence that, look, support, went underneath, darn, bumped its head, darn, resistance, resistance. It did poke over yesterday though. Okay, so let's take a look. What do we got here? We got another line. You know, these lines, they just never stop. Okay. So we have an uptrend line right in front of a very important line. This line has held since, tell him, Johnny, since back here, October 2019. Now, why did we say October 2019? You see what happens when it broke this line? And I'm not zooming into it because this is an annoying thing. Actually, can I do this? No. Oh, you mo. What did I just do? Okay. What did I just do? I don't know what just happened, but let's get a view. Okay, hold on a second. I don't know what just happened. Okay. Which is why we don't use that thing. Okay, everything's back to normal now. That was scary. Okay, so here's all of our lines. So we're not going to use that button again because that was terrifying. But what you can see is once it, you know what? Computer, you don't tell me what to do. I tell you what to do. Okay. So once it broke underneath this, actually, come on. All right, that looks good. Okay, so once it broke under this, and you could see a bottom here, broke underneath, it just fell apart. And then it bumped its head on it a couple of times, bumped its head. Once it broke out over here, look, it came up and then held it as support. See, the first time it broke this line, it then held it as support. And once it held it as support, it went off to the races, right? Off to the races. Okay. So what we can see is that line's very important. Okay. Okay. That was difficult. I'm so sorry. All right. So we're getting, that's where that line is right here. And you can see we bumped our head on it there. We could bumped our head over there. We poked over it, but we came back underneath it. But we're holding this bottom trend line, which means what happens here? That's the question, right? Because if we can break over this line, it's off to the races. And if you break over that line, you're conceivably going to break this line too, which means if this stock gets to $40, there is no more map. It's just clear skies. It's clear sailing. It's $37.60 now. So can this stock get up 2.5 points? Because if it can, you are owning something that could possibly go to 50, 60, 70, 80 in a very short period of time. I like that. I like owning that. So we are very, very happy with Twitter. But that being said, if it breaks underneath this line, it kind of becomes a problem, right? So you don't want to see it get back under 36.5. Let it stay where it is. This is a good thing. Now, where's the market? Oh, look, the Nasdaq's up now because the Nasdaq is a follower. Oh, you guys are doing good. Let me follow you. Let me follow you. Now the VIX is down. This is starting to look like clear skies ahead. All right, so let's take a look at our account. All right, and we are down in our Twitter position today because we owned it at 135 yesterday. So let's buy some more, right? Why not? Let's buy that other eighth we talked about. So let's buy 30. 40 calls, let 1.24. Oh, give me the stock. Wait, I should definitely have the stock. Oh, so it was executed, right? I got it at 124. So now my cost on Twitter is 129.5. So what's 40% on that? Take out the calculator. 1.295 times 1.4 equals 181. So let's go to our orders. And let's change this. So we want to sell at 180. And we want to sell the 60 that we have, right? Okay. Cool. So now if it hits 40%, we already have it set up. Now we're down $195. No, 360. Boo, Anthony, right? Like totally, I'm terrible. But 27% of our portfolio is in this. What does that mean? It means 72% of our portfolio stands ready. If Twitter does something that is like, whoa, I can't believe it went down a whole dollar. Can't believe it went down, whatever. We stand prepared to step in and buy more, right? Now, if the facts change, we'll change along with them, right? Like if all of a sudden this new CEO diddles little boys, like, well, we got to sell the stock. But short of that, we're looking to buy more. So we're happy with this position. And if it goes up 40%, darn, it ran away from us. Like, see you later. So that is our Twitter. I think Mike jumped in. Let me see it, the chat. Is it, okay, so I want to get away from the word stupid. And I'm not saying this to you, Mike, but I said it so many times that, it's just not a good word. Is it stupid to hold Twitter over the weekend? Because this is a position that we have. So there's a couple of different things that would go into that decision. If it's purely a trade, well, you don't want to risk the reasons you own something changing, right? So when people are trading things, okay, I'm buying this because I believe the technicals are this, and I believe this Fed is going to say this, and blah, blah, blah. That can all change over the weekend because that's all about narratives, right? That can change over the weekend. Twitter is a story. It is a story that's fundamental. It's not technical. So Twitter is Twitter. We know what Twitter is. Twitter has the money it has on the balance sheet. Twitter is doing what they're doing. Twitter has so many checkpoints that you actually do want to hold Twitter over the weekend because you are praying to God that somebody in Barron's or Wall Street Journal or something comes out and puts a highlight on Twitter because this would be the easiest thing to highlight. I just got an idea. Well, I couldn't trade in front of people and then do stock analyst highlights because that'd be insider trading. I'd be pumping my own. That securities law can't do that. But if somebody was smart enough that had a good following and went ahead and posted about Twitter, Twitter would go up. Therefore, what can someone say bad about Twitter? What can someone say good about Twitter? If the good outnumbers the bad by a lot, then you want to hold it over the weekend because you're praying somebody says something. But if you're simply just trading something, I'm in the NASDAQ and I believe it's going to go down. Well, there's an equal amount of good and bad that could happen. So I don't take 50-50 bets, right? But Twitter, I believe there's at least 8 or 9 good things you can say for every one bad thing. Therefore, I will take that bet and I will hold Twitter over the weekend. If I can get in and I can get out, if I get in and I can't get out, I'm a buyer an ETF with 1 times 3 and my market is closing soon. I can't tell you what to do. I can only tell you that I, with my money, bought Twitter in front of everyone, and I am happy to own Twitter over the weekend. That's all I can say. All right, cool. Mike with the heart. I actually love Mike. Like, I heart him too. So you know what? I know it's a little early. Let's take a look, right? Maybe there's some crypto stuff going on. I know you guys love your crypto. And that sounded rude. I didn't mean it rude. All right, so let's see. Anything with crypto. I don't need my watch telling me it's time to stand up. Isn't that rude? And then you finally stand up to go to the bathroom and your watch is like, congratulations, you stood up. And you're like, how rude are you? Like, seriously. Crypto has made a very strong run. So let's take a look at Bitcoin and see if we could gain anything, right? So Bitcoin does have a volatility. Volatility, Bitcoin. Maybe I can spell volatility correctly. All right. Okay. So what do we have? So we have Bitcoin going up over here, volume going down, volatility. All right, so let's not get lazy. Volatility's going up here, volume's going down, Bitcoin's going up, right? Right, okay. Bitcoin continues to go up, volume continues to go down, volatility goes down. So as I tell us, there's less people buying here, but less people are nervous. So you can then go ahead and create a narrative to that. All right, well, if there's less people buying, well, then this price isn't very good. But if there's less people that are volatile, they're not uncomfortable anymore, one can say that sets up for a buying opportunity, that people are just waiting. Hey, listen, I'm not going to buy at these prices, but if it ever pulls back again, I will. And that's exactly what people did. Because once it pulled back, look at the volume increase. So the volume stayed stagnant here. But then once it moved and volatility stayed stagnant, actually it went down a little bit. And then what happened? It went higher, volume went up, and volatility went up a little bit because people, it's Bitcoin. That volatility shouldn't have gone up, but it did. All right, now what's happening? Bitcoin is still going higher. Volume has not trailed off. That volume looks pretty, pretty even. That volatility looks pretty even, right? Where are we now? Now Bitcoin is going down, but volatility is going down, right? That looks like it's going down. And volume looks like it's going down. Now, like anything else, we always say these are daily volumes, meaning the day's not over. This volume is going to continue to go higher. Do you believe this volume will be higher than that one? I don't. And if the price goes down, while volume goes down and volatility goes down, one could say crypto is offering an opportunity. So if you own crypto, not you. If I owned crypto, I would continue holding crypto. If I did not own crypto, I would maybe buy a little bit of crypto. Like it seems like a good time. And if that little bit ended up going down, like crypto came in, I would revisit us Monday and see where the charts are. So we will do crypto Monday. And if they're conducive to being constructive, we would then say we would buy more crypto. So that's crypto. And we looked at Bitcoin because everything else follows Bitcoin. So if that's the sentiment from the Big Daddy, you can then go ahead and say, oh, well, I like Matic. Let me do that. And it probably works the same way. All right, so we're going to go. If something drastic happens today, we'll post in RHINO Wealth. My day is going to be short. For those that participated with V earlier this week, you do know a little bit about my personal life, which isn't a secret, but it's not. I don't find it to be my story to tell. I know that sounds weird, but I think I've been around too many people in my life that weaponize moments, and I will never do that, or leverage moments like that, and I just won't do it. But my brother did pass, and I'm throwing him a really, really super event tonight. So that's where my focus is. So if something drastic happens, I will participate. I will be there with you. Otherwise, this will likely be the last time we chat till Monday. So I love you all, and make sure you're on with V at 12. So actually, I asked V yesterday, how is the attendance? Because I know Rick was doing it at 2 o'clock, and she didn't know that because she came after Like, she doesn't know who Rick is. We know him as Rick because that's Rick. Like, we love Rick. But she was like, yeah, the attendance was a little low today. And I was like, it wasn't you. I used a different subject line, which is why our numbers are a little bit low this week. I was testing new subject lines. And secondly, there was a competition. There was a different webinar at 2:00. So what I would say, if you guys could be so kind, please go ahead and join today at 2:00 so that she can see that a lot of people did not forget her, because nobody ever wants to be forgotten. All right. Love everyone. And I will see you Monday. Bye.